Alright, so I'm gonna shift a little bit away from crypto because I am also very heavily invested in the stock market. And the reason why I am also invested in the stock market is not so much to make those grand returns and make my $1 million from the stock market, but by being heavily invested in it, I am forced to always read up on the news. I feel the pressure to keep up with the times and be sure that I understand what's going on in the world. So, because of that, I'm always able to then transfer that knowledge over to crypto. You see, it's very important to understand inflation as that is one of the factors that seems to be affecting crypto. So, by being very involved in the stock market, it naturally spills over to crypto as well. And so over the years, which is not very long, I'm not that old, but I have noticed when it comes to the SPY, one of the best thing you can do is always dollar cost average. So I naturally would just put in some money and I'll just keep buying it up over time, over time, over time. And I'm still doing that. Even though I have money in crypto, I'm still going to continue to put some amounts into stocks. I'm still going to put some into the SPY. This is not financial advice. So do your own research. Instead of always dollar cost averaging, let's say on the first of the month, which is a very common strategy, which is simply dollar cost averaging on the first of the month. So I just pulled the charts randomly back to like 2016. So if you were to dollar cost average on the first of the month, you would have gone in on this candle, you would have gone in on this candle, and then this candle, and then this one over here, and then finally over here. So I mean, it's easier because we get our paychecks once a month. But what I have found to be a little bit more successful, you are able to get in at your average entry price is about 4 to 5%. I use a calculator. I try to run through the numbers. Your entry price would be about 4 to 5% better on average, if you were to just use this strategy instead, which is what I do, which is it's a very basic strategy. See, I don't like to spend all my time sitting around and just like staring at charts. It's just I just don't want to do that. I don't want to be a trader. So what I always do is put my first entry of the month right here. Whenever the market hits the 20 SMA, which is the red line, I would enter my position. Usually it hits multiple times, but once I enter it the first time, that's basically it. And I only enter it in a 1 month block because that's when I get my paycheck. And if that month I do not see any kind of retracement, I do not see it touch, this month I did not buy anything. So the following month I would have entered here, and then here is the 50 moving average. So whenever the price touches the 50 moving average, I would tap on my 10% cash reserves. I would use my 10% cash reserves to enter in here. I may not use the entire 10%. Sometimes I use the entire 10%. Depends on the current economic like what's the reason for the downturn. So if there's no big news, it's fine. I may put my entire reserve right here. If it's because of some pandemic, then maybe I might not even enter. And that's basically the strategy. So if you enter on the 20 SMA instead of a monthly open, your average price for the next 30 or 3 years, in the past 3 years, would have been about a 4 to 5% better entry. But the second part of the strategy, which I mentioned, which was buying up at a 50 moving average, you also need to find a way to take profit because I used my cash reserves to buy up at the 50 moving average. So I need to find a way to refill my cash reserves by selling it out. So when would I naturally sell off? So there is something called Bollinger Bands. If you were to set it to 2.5 times, if you were to set it to a 2.5 times standard deviation and sell it every time there is a close right above, then you should be able to take some profits. So if we were to enter here, the first close was right here. I would have taken profits right here. And then my cash reserve is filled. And guess what? We have another time to deploy right here. And the close, well, the next close is actually up here. If I still had cash reserves, I would have entered here and I would have closed up here. You start to see a trend as I just keep running through this. Again, I just pulled a random chart from 2016, and one of your entries was here, and then your exit was here. Reload on your cash reserves right there, and then there isn't an entry. There's just no entry. During this period, everything was going sky high, and if you were dollar cost averaging, then your entries would have been here, here, which is not bad. You're making quite a decent amount during 2018. Then finally came the crash. Now, when you see the market just move down so quickly, if I'm not wrong, this was when the Federal Reserve said that they were tapering and then interest rates were going up. So during that time, like stocks as a whole just isn't going to perform very well. So you would anticipate in the next few days it's going to crash really, really hard. So I stick to my rule. I dollar cost average in here, but I did not buy in at the 15 moving average. The reason for that is because I'm way more of a fundamental person. I prefer research, and I realize that this isn't going to work. Like if the Federal Reserve is going to say we're going to start tapering, then this exponential growth is not going to last. And that's what happens. And that may actually happen again because the Federal Reserve did just mention that in February they are tapering. So if you see a sharp downturn in this current stock market, please be aware of what may happen. History may repeat itself. Honestly, I actually entered here. I felt that it was a mistake, but I did enter here. My cash reserves was spent here, and I had no way to exit all the way until this day. At the end of the day, I did make some money, but the problem is it's just 2%, right? So my cash reserves grew by 2% because of that trade. The next entry was back here. And the only time that I could exit was on the close, which was up here, which again isn't too bad. We get about 7%. So this is how I've been growing my cash reserves, but I'm not looking at the charts all day long because you can set notifications as to when the market just broke through the 20 SMA. That means it could be quite close to the 50 SMA. Yeah, so this is my strategy on how I continuously dollar cost average, which on times like these, when the markets are just going down and there is no bottom, I simply go back to the good old buying in at every month. First of every month. Well, first of every months here. First of the months here and here. Yeah. So only in the uptrending market that this strategy works. And looking at the S&P 500, I must say it is a market that likes to trend upwards. Of course, there are some years that it just doesn't want to. But even then, you can just head back to your once a month dollar cost average and you wouldn't be doing too bad as well. So that's all I have for today. I hope this strategy makes sense. I just want to share how me and my sister, how we invest quite brainlessly because we are too busy trying to do other things. We may share it one day of the other things that we're doing. But until then, this is what we have. I hope you enjoy and learn something new today. Remember that we are not financial advisors, so do your own research. Do not say that we are giving you advice because we are not giving you any advice. We're just sharing our journey, so don't sue us.